If you still don't understand how to trade the ICT power of 3 setup, this video will break down everything you need to know step by step. A lot of people have been teaching this wrong on YouTube, and there's so many videos on it that aren't showing you the highest probability conditions for this setup to play out in. So in this video, I'm going to show you the highest probability conditions this setup actually works in. I'm also going to share with you a secret hack that really increases the win rate for this strategy. So by the end of this video, you'll know how to trade it. Let's get started. So which pairs does it work best on? GBP USD, Euro USD, GBP JPY. These are the 3 pairs I mentioned in the previous video, but just to show you guys that it works on other pairs as well if you look for it in the right place and if you look for the right strategy. We've got AUD USD, US 30 and NAS 100, so even on indices it works as well if you use it correctly. Now, what times are we going to be trading? So the highest probability session we're going to look for, the highest probability time window, is going to be in the London session. We're going to look for it between 2:45 AM to 4:30 AM New York time, which is 7:45 AM to 9:30 AM UK time. And it's a 4-step process with only 2 time frames. It's a very, very simple strategy. And there's 2 main variations to this strategy which a lot of people aren't teaching. Let's get into the first variation right here. I've also got the 4-step process, so let's break down each step. So as you can see, there's bullish institutional order flow. You can see prices are moving to the upside, right? But then eventually price gets exhausted right here. So then we look for our 4-step process. And as you can see, our time window starts right here. So before our time window, we're going to let price do whatever it wants. However, after our time window, that's where we're going to look for the setup to form, and we're going to look for our entries within that time window. It's very important, it's very vital that we get our entries within this time window right here. First step is we look for liquidity sweep A. What does this mean? We're going to look for a 15-minute liquidity sweep. So that's why I've called it A, because that's the first liquidity sweep we're going to look for. And guys, the clue is in the name, in the power of 3, accumulation, manipulation, distribution. So accumulation is where we're going to wait for liquidity to be built up before our time window starts. So as you can see, prices made buy side liquidity above this high right here. So there's buy stops resting above this high. That's accumulating orders. All we're going to wait for is that second step, that manipulation, right? So the first step is liquidity sweep A. That's the manipulation phase. So as you can see, price has swept that liquidity to the upside. Then we're going to look for liquidity sweep B. And this doesn't always have to happen, but this is going to be on the 1-minute time frame. Sometimes you might not see a 1-minute liquidity sweep. However, the highest probability trades do have that second liquidity sweep on the 1-minute time frame. So we got liquidity sweep A on the 15-minute time frame right here. And then after it sweeps liquidity, we drill down to the 1-minute time frame, right? Then we look for that second liquidity sweep. So as you can see, price took the buy stops from this high right here. So buy side liquidity was swept with this high right there, okay? Price swept liquidity. Now the third step, and again, we're still in that manipulation phase. So all we're waiting for now is that market structure shift to tell us that we're entering the distribution phase, right? So the third step, as you can see, market structure shift right here, breaking this low. Now, I've preached this in my video multiple times before. We want to look for that market structure shift with displacement, because if price makes a wick right here, that's telling us that smart money probably isn't involved in that move. If price makes a whole body and a full energetic move below this price level, that tells us that smart money has entered the market. So now the last step is we're going to look for that extreme FVG or order block entry. Now we're going to look for the order blocks to take the trades off, but the FVG is going to be in alignment with it, right? We're going to mark out the mean threshold, the 50% of the order block, or you could enter off the full order block. That choice is yours. However, I'm going to show you live market examples as well to show you the more favorable entries. All I've done is I've put my entry at the 50% right here, stop loss above the high of the order block, or you could put it above the high overall. And if there's FVG in alignment with that, that's even more confidence for the trade to work out. So the second variation is a lot more obvious. You can see it's consolidating here. This is clearly the accumulation phase. So if I just mark this off right here, you can see this is clear accumulation. This is a manipulation. And then we're going to look for that distribution, okay? This has got 1, 2, 3. That's why we call it the power of 3. And again, with this setup right here, we've got accumulation right here, all throughout this order flow range right here. However, this is going to be where the most orders are accumulated, the last swing highs. We're going to look for that manipulation. And then within that manipulation leg, we're going to decipher that manipulation leg to catch the distribution where the highest risk to reward will be available, where the highest risk to reward will be present in that distribution phase. However, we want to find our entries just after the manipulation phase to catch that distribution in the opposite direction. So again, pretty simple. You can see price is consolidating over here, does that same exact 4-step drill. So liquidity sweep A, liquidity sweep B, then we get that market structure shift in the opposite direction with displacement, mark out our entry with a fair value gap and the order block in line with each other. We get the order block, mark out the mean threshold, place our stop loss above the high, and simply target opposing liquidity. You could target low-hanging fruit such as an order block or discount array right here. You could target the lows, equal lows, because in that accumulation, it's building up liquidity on either side, right? So as you can see, buy side liquidity is built up over here and sell side liquidity is built up over here. The purpose of that accumulation is to build up liquidity on each side of the market. So let's get into the live market examples. We smashed another take profit in the signals room. The value in the signals room is absolutely crazy. It's on a special offer right now for $30 a month. I'm going to be increasing the price to $100 a month this week. So if you don't get in now, you'll have to pay $100 a month. But if you do get in now for $30 a month for the special offer price, you won't have to pay $100 a month. If you want to pass your funded challenge 100% guaranteed, or you don't pay a single penny, our automated trading bot will pass the funded challenge for you like it has done for hundreds of other clients and got them funded 6 figures in real trading capital. If you're trading your own funded challenge, you are gambling your account. There's a chance you'll lose it. However, with us, it's a guaranteed pass. We will pass the funded challenge for you 100% guaranteed, or you don't pay us a single penny. We will refund you all of the money that you paid us and what you paid for the challenge. It's an absolute zero risk investment. There's absolutely no excuse for you guys to not be funded at least 6 figures in trading capital right now. So make sure you get funded whilst you still can. The link to this will be in the description below, but make sure it's this link that you're using. There's a lot of people that are pretending to be us, so make sure it's this link specifically, and the link to this will be in the description below, so make sure you join up and get funded 100% guaranteed. We got so much proof, we got so many amazing reviews, there's so many testimonials, and I don't know what you're waiting for, guys. You will also be added to the signals room for free for 1 month after we pass the funded challenge for you to learn how to take trades on your funded account and make real live profits. If you haven't already, go and join that group. It's a 100% pass guarantee and you will be funded, and the signals room is on offer right now, so make sure you get in whilst you still can. So as you can see, I've delineated the time window and we're on the 15-minute time frame right here, and we're on US 30, right? So on the 15-minute time frame, what are we waiting for? So we're waiting for the accumulation phase to be swept, right? We're waiting for that manipulation phase. So where's liquidity sweep A? Where's the high for that? As you can see right here, we've got this Asian high right here prior to our session, so the previous session high. That's a major liquidity point. And also another confluence which no one is talking about is looking at a raise that price taps into. So looking at the POI, the point of interest that price taps into at the manipulation phase, right? So as you can see, we've got this whole order block area right here, and you can even mark out around 50% of this, but we've got this whole order block area right here. So after price sweeps liquidity and taps into this order block area right here, that's more confidence for the trade going in the opposite direction. And as you can see right here, we've got this low right here. We've got pretty much relatively equal lows. We've got liquidity right there. We've not really got a good premium array that price can tap into after it sweeps this liquidity, okay? So we're waiting for price to sweep liquidity on either side, preferably to the upside, right? So all we're waiting for is that liquidity sweep A, right? That's the first step. So as you can see, it's swept liquidity right there. That's the first step done. So now all we do is simply go down to the 1 minute time frame, and we're following the rules, guys, okay? We're not changing it around. We're following those exact same rules. So you just wait for price to make that second liquidity sweep, and as you can see, it's swept liquidity sweep. It's swept liquidity right here from this high. So that's liquidity sweep B. Or you could wait for this high to be swept right here, this fresh liquidity, right? Price sweeps that liquidity right there, and it does sweep another set of liquidity. So all we're interested in is that most recent liquidity sweep. As you can see, price made that clean market structure shift right there, closed below right here, but then as you can see, this was the full displacement move. So price swept liquidity, made that market structure shift. You could also say price made a market structure shift from this low as well, but it's clear that price is moving down now, and it was with displacement, right? Now you can mark out this order block right here, and what have we got within this order block? We've got this fair value gap on the 1 minute time frame, right? So, and bear in mind, price has tapped into that order block on the 15-minute that we marked up. So now what we're waiting for is that entry, and you can mark out you can enter at the 50%. However, you don't want to risk being swerved on the trade. So I'd recommend putting your entry at the low of the order block and then placing your stop loss above the high. Now, obviously, it would be safer to put your stop loss above the full high overall, but you can put it above this high right here. Then run a target that opposing liquidity. And as you can see, the one that we marked out already is right there, and those relatively equal lows right here. So we could target that overall low if we really do want to hold for that long, which would give you a 1 to 12. So if you put 1% risk on that, that's 12%, almost 13%. And imagine if you took that trade on a 100k or 200k account, we pass for you 100% guaranteed and get you onto the live funded stage 4. Imagine how much profit you could make off this one trade alone, right? Now, it doesn't have to be such a high risk reward. It can be a low risk reward. It doesn't even have to be a 1 to 7. If you get consistent take profits with a lower risk reward, that's completely fine as well. So all we do is wait for the trade to play out. And as you can see, price perfectly taps into that order block area right there, which shows why if you entered at the 50%, you would be swerved and you won't find success with the actual setup, right? And also we can get rid of that because this is the most recent liquidity sweep B. Okay, and all we do is just let price play out, right? Simply, we found our entry within our time window. The setup was framed within our time window. That's completely fine. Now we just let price play out. And as you can see, that first liquidity point was hit. That's the first TP right there. And notice how we took profits within our time window, right? And remember, if you don't want to hold it for this long, that's completely fine. You can just enter and exit within your time window if that suits your trading style. And as you can see, price absolutely tanks and goes even further, right? If you were to hold it for whatever reason, if you did have your overall bias, you could hold it for that long, right? And that would give you just under a 1 to 20, right? But that's the first example on US30, and it just proves how bulletproof the strategy is if you look for it in the right areas. Now, this is a more basic example. This wasn't when it was making bullish order flow or bearish order flow. It was simply in an accumulation phase, in a consolidation phase, got that sweep of liquidity, then took the trade in the opposite direction. Now let's get into the second and harder example. So now again, we're on AUDUSD and we're on the 50-minute time frame, and this is going to be a lot trickier than the other one, and a lot of people will be caught out with this one right here. So as you can see, price has made bullish order flow right here. It's almost made a market maker sell model, but I'm going to go into that in a different video, right? So as you can see right here, price has made impulses to the upside, and what's price done right now? And as you can see, it swept that previous session high, that previous swing high right there. There was buy stops resting above this high. There was buy side liquidity right there. This was the whole accumulation right here. You could say this is your whole accumulation throughout this whole range right here. But this is our most recent accumulation phase. It wouldn't be much use to us if we mark out this area right now. So this is going to be our accumulation phase right there. Price is already manipulated. So what do we do in this scenario? Well, price has already done liquidity sweep A. It's already done the first step. Has price tapped into a premium array? Has it tapped into a bearish area, right? And as you can see, that's our point of interest. That's our premium array that price taps into right there. Now we're on the 50-minute time frame. It's 2:45 right now. So all we do, because price has already tapped into the area, is you go down to the 1-minute time frame. We're sticking to the rules and the exact same thing. And again, we're on AUDUSD. I'm just showing you how it works on almost every single pair at the right time if you look for the right setup. So remember, the 50 minutes already tapped into that area. We know price is going to go down from here. We know this is the accumulation phase right now. This is the manipulation right here. And we're expecting that distribution. So we're deciphering this manipulation phase to get that distribution phase and catch that distribution move, right? So in the opposite direction. So all we do now is drop down to the 1-minute time frame. And all we're looking for is the second step, liquidity sweep B. If it's present, it doesn't have to be present all the time, but if it is present, that's even higher probability. So before this high was made, you can see there was a high right here, almost relatively equal highs right there. Price swept that liquidity, broke this low right here. And as you can see, price did struggle to break it with this wick right here. However, with these bodies right here, price did close below it multiple times. So where's our order block? Where's the extreme order block that price is going to tap into, right? Now, a lot of people say this is your order block right here. However, I'm going to go for this candle right here because it has a bigger body, there's more volume, and we're not looking for just the last up candle before the down move. Now, in this case, the FVG was right here. It wasn't in line with the order block, but it shows us that there was still FVG, there was a market structure shift, and there was FVG or displacement made right there. So we do know that the trade could go down, but we're going to place our limits right here, or our entry right there, and place our stop loss above this high right here. You could put it above this high overall, but you could just put it above this swing high, this fractal high right there. And here I've marked out the mean threshold of that order block, the 50% if you do want to enter there. However, it would be obviously safer to enter at the low of the order block, right? So we found our entry, found our stop loss, and I'm going to go up to the 15-minute again to go mark out that take profit level. But we want our entry and our setup to be formed within our time window. So let's see what price does. As you can see, price perfectly wicked us in right there with that wick, okay? And price moves to the downside. And again, if you wanted to enter again or scale in, which would be riskier, you could mark out this market structure shift and this order block right here. But it would be riskier. You do want to enter at a higher price point if possible. Okay, so as you can see, after we have our entry right there, price runs away, does retrace back in over there. But let's go up to the 50-minute time frame to see how price moves away overall. And as you can see, that's our main draw on liquidity. And bear in mind, we do have this imbalance right here with this order block. So I would be cautious of this area if you are taking profits after this liquidity level right here. As you can see, this gives you around a 1 to 7.6 risk to reward ratio. So just over a 1 to 7.5. Let's see how price treats us right now. As you can see, it retraces. But then if you were to go on the 1 minute, you can see that price would have tagged you in to that 50% entry if you were holding it, right? If you were to have your entry at the 50% and then place your stop loss above that high, that would obviously give you a much higher risk reward, but it would be riskier because you can miss out on the trade overall, and the trade can run away without tagging you in, which you don't want, right? All we're waiting for is price to come to our liquidity level. As you can see, price smashes our take profit and continues running away, and that shows you how easy the strategy is. It's a completely simplified checklist. A reminder, if you want to pass your funded challenge 100% guaranteed, use this link right here. The link to this will be in the description below, so make sure it's this link specifically. It's a complete zero risk investment with a full 100% money back guarantee. There's loads of proof, loads of reviews, loads of testimonials, with the best service out there, with the fastest passes in the industry, and it's a complete 100% guaranteed pass, guys. So if you haven't already, go and take action and get funded now. And the signals room by itself is $30 a month. It's on offer right now. The price will be increased into $100 a month, so get in now whilst you still can. The offer price of $30 a month. And remember, once we pass your funded challenge for you, you get free 1 month access to the signals room for completely free after we pass the funded challenge for you and get you on that live funded stage, so you can learn how to make real profits. And that's all for today's video, guys. I've shown you the 2 main variations for the strategy. Remember to keep it simple, keep it as simple as possible so you guys can follow it consistently. So make sure you share this video with a friend who's struggling with the strategy, and make sure you share this video with a beginner, because we're completely simplifying the ICT concepts and not overcomplicating it like a lot of other people on YouTube are. And also, guys, something very special is coming very, very soon, and I'll update you guys, so make sure you stay tuned for that. That's all for today's video. I'll see you in the next one. Peace.